All right, folks, welcome back here to the Diagnostic Trading Hour. Let's check out where markets are at today. We got the S&P is currently up 20.5, up 1%, flying on up. We got the Russell up 14. Nasdaq is up 30 points on the day with the Dow up 179 points. We'll get on over at copper. We got copper is up 0.25%. We got gold up down actually slightly right now. Gold and silver are down. Silver's down 1.3%. Copper's down a little less than 0.25% at the moment. Gold down 2.5 points. Copper up 0.065 and silver down 0.24. We'll get on over at our ag markets. We got corn is currently up 75 or 3 ticks there, so barely moving at all. We got soybeans. It's actually up 9 points on the day, so I'm up almost 1%. And looking over at oil, oil is currently up massive. So just a huge move, a $3 fly up on oil, up 6% on the day. We'll get on over, which is, I mean, it's insane. We got the dollar index is currently down 0.5%. So King dollar getting hit right there, but not against all the currency pairs. And then looking over the bonds, bonds are slightly negative as well. Diving in our currency carriers, we got pound dollar is definitely up against the U.S. dollar there. It is up 119 pips. Euro dollar up 123. Euro pound up 22. Dollar franc is currently down 43 pips. Dollar yen is up 3. Euro yen is up 157 pips. I hope y'all are taking advantage of this volatility. We'll get on over at the Aussie yen. It's up 59. Aussie dollars up 45. Pound yen up 146 pips on the day. We got the euro franc is up 82 and the pound franc up 71 pips. All right, that gets us caught up on our daily market wrap. We'll get on over at some of the headlines in the news today. Canadian stocks, TSX, gaining as oil prices are starting to bounce on back up. Natural gas falling on down to August 2012 level lows today with that 2% drop pushing us all the way back to 2012. They're going to start capping some of those puppies off to get that back up, I'm sure. We'll get on over at the dollar CAD falling sharply as the oil prices are moving up. Dollar CAD, though, not looking too horribly bad, but let's see here. Let me... Yeah, maybe it is. Maybe I need to update my list. Let's see. Try that one more time. I didn't like that. But looking on over here. There we go. Yeah, down 148 pips. I don't know how that got off my list. So, yeah, dollar CAD down 148 pips as oil is flying up. Wall Street moving on up after the claims data came in, unemployment claims data. And Pfizer deal helped it out as well. We got a WTI Crude. Obviously busted the $50 level again. So some people said we'd never see 100 again. Who knows? This made us be a little bounce relief rally though. Dead cat bounce going on back down to 30. We'll see. Jobless claims point to a strengthening labor market, if you believe in those numbers. And apparently enough people do that. You better follow the chart and go along with them. We're going over at the pound yen. Pound yen jumped to 179.80 on a 2-week high. All right, those are your current market headlines for you. Going on over, wanted to do a review on the VIX. So let me pull up a VIX chart for you. We're going to dive into that for a second. And let's see here. Let's go in. Let's do a dual chart setup. Let's throw the VIX on here. And let's look at just the daily markets. All right. So first off, what is the VIX? The VIX is the volatility index for the SPX. Okay, not the S&P, but they're similar, but they're not the same. It's basically a measurement of the implied volatility of the S&P 500 E-mini options. It normally trades in an opposite correlation, inverse correlation to the S&P 500. When the S&P 500 is going down, you'll usually see the VIX go up. When the S&P 500 is going up, you usually see the VIX going down. Why is that? When the market's going down, a lot of fund managers and stuff do a lot of option buying to protect their positions so they don't have to close them. increased demand leads to increased premium cost. That premium cost is extracted into a number known as implied volatility. The VIX is one of the ways to measure implied volatility on the S&P 500. So, as you may notice recently, as the S&P 500 has been in this little oscillation bounce over here, so we can just sort of zoom into November to now. The same thing here. That you can see the definite inverse correlation right there. Every once in a while it gets a little bit off. So you'll see it go up and down right there. Then back up, back down, back up. As you notice today, market's up. VIX is a little bit down. Yesterday, market was down. VIX was a little bit up. So why is that important? By understanding that, you can understand, are options more expensive or options cheaper? You could also measure, like I said, expected moves in the market. Okay? So one of the things I like to look at is I'll go in, and one of the nice little features I like on the Thinkorswim platform is I can go in and get a seasonality chart. I can even do the same thing up here. Right there. And not so much that the SDS is helping because it's just up, up, up. But looking over at the VIX, what do I normally see? What I normally expect at this time of year? So I'm going to back up. We're going to go back here. We're going to look at basically now till May. Okay? And we'll do the same thing right here now till pretty much May. And go, what is the VIX doing compared to what it normally does? Well, usually it does not spike this high right here in January. We got some massive spikes. And it heads on down into April, with it starting to spike right back up at the beginning of May. You can see that this red line down here is the VIX seasonality, and the green line is the current VIX. Now, what seasonality? Well, right there, it's a 5-year seasonality. Okay, we can look at different seasonalities. We could look at, well, what about a 20-year seasonality? Well, it's just crazy compared to 20-year. What if we just looked at the last few years? Bring it down a little bit and go, let's look at, one day over the last 3 years and see how that is still. I mean, getting a massive spike right there, getting some really big moves lately compared to where the VIX has been over the last few years. And if we go back down a little bit further, we did get a spike in the last couple of years here. We got one spike right there. And then it pulled down, actually pulled down really, really hard right into the middle of February, meaning usually the market would be expected to rise in that same time frame because option volatility went down, markets rose up. So bears getting declawed a little bit, and if the VIX seasonality is anything close to accurate this year, then we ought to see a very similar pattern happening. And we can sort of see that right here where we see the market going up. And you can see right here seasonality going up, up, up. If we look over the seasonality of the last few whatever, so last 5, let's say last 3. Again, we're seeing that consistent rise at this time of year. Go on back down. 2 years, obviously even more so. We go further back. Do we see it? Zoom back in there. Still do see that rise here over the next couple weeks going into Valentine's Day there. And if we go back just a little bit further, we'll do the biggest one we can here. I think we do 20. And go, is that a ongoing? And we still do see that it does seem to rise slightly. Even over like a 20-year cycle, the S&P usually is rising up. So I'm still going to trade the chart. I'm not just going to follow the seasonality, but I want to be aware of what other traders are aware of. That's what diagnostic trading is about. It's about going, what do other traders look at? They look at seasonality. They look at statistical moves. They look at technical indicators like 200 period, 100 period, 50 and 20 moving averages. They look at Fibonacci levels. They look at support and resistance. They look at golden and Gann ratios. So combine all those things together, but there you get the whole picture of how the majority of traders are in some way analyzing the market. Seasonality is one of those pieces. So I know that seasonally, at least, the S&P 500 is usually rising going here into the beginning of February. And so I should not be surprised to see the market going up. I should not be. Why is it important to say I should not be surprised? because the number one trader, and I've asked multiple brokers about this, the number one reason traders lose, beyond trading too big of sizes and not taking stops, is they trade counter trend. They're like, oh, it can't go up anymore, I'm going to sell it now. It can't go up anymore, I'm going to sell it now. Can't go up anymore, I'm going to sell it now. And they just keep going and going and going with that. So that's why it's important to have that seasonality. It's like, hey, I should not be surprised that the market continues to rise over the next couple weeks. So I shouldn't just because I think it's going to go short, fade it. Now, it doesn't mean that if you don't have other things saying it's going short, you can't follow along. But don't ignore the chart. Let the seasonality tell you, hey, pay attention to the chart. If there's any advantage to seasonality, that's it. It's saying pay attention to the chart. Seasonally, it does go up. The chart needs to confirm it before you take a trade on it. But don't think your intuition can outsmart the chart and the seasonality both. So at least not on a consistent basis. We all get lucky now and then. All right, let's do this. Let's do a comparison here. We got dollar CAD, and we got oil. All right, and let's go back over. You guys should see oil actually usually rises. This is a little interesting thing for us here. Oil actually usually rises into September. So it goes a little bit flat there for a couple months, but overall, so it's September, and then we see it drop down seasonally. That is on a what? Let's see what time frame. That's only 2 years. Okay, let's go. But still, that's 2 years. 3 years, same thing. 10 years. So it actually starts a little bit early over a 10-year period. It starts as early as July, but it rises into July. Okay, going on into 20 years. Pretty much July. That might be important. We see oil rising all the way to July before it starts turning down. They want to pay attention to that seasonality on oil. We'll talk about the dollar CAD and oil here when we get back right after this break. All righty, folks. We'll come back here to the Diagnostic Trading Hour. So when we last left off, there, we're talking about dollar CAD and oil and seasonality on them specifically. And what you can see is that oil has a seasonality over the last 20 years, and we saw this over multiple time periods, measure up to be accurate, that you could go in and see that it actually usually does rise starting right about this time. So first week here in February, and seasonally it rises right into July before it turns on back down. So would not be surprised to see oil moving on up right now, especially when everybody's saying it's going to 20 and 30 and never go to 100. And seasonality shows otherwise. Seasonality actually shows that we should have had that big drawdown that we had. Not as big as we had, but seasonality, it usually does drop down between like August and right into February. So we're right at that time now to where that is in effect, and we're starting to see it happen. Dollar CAD also showing that its correlation is not a strong feeling there, but let's see if we can maybe adjust this and try to get it. Let's see, I'm not gonna worry about it. We'll just you just gonna have to use your imagination with me here. But right here in July, what you can see is that right about this time, dollar CAD starts doing what? It starts turning down. Okay, so it starts turning down right there, and then it starts turning back up in July. It inverse of oil. So dollar CAD being inverse of oil. Massive move here on dollar CAD today. If I hop on back over just a regular chart, we can check that out. Let me go back over here. Go to chart type. Just get a standard one. Nice big drop. Seeing a move from 25.79 down to 2400. So I mean, massive move. And several. I mean, but it's been having a lot of those days, just back to back to back to back to back. Some huge moves in the dollar CAD, and huge moves in what else? Huge moves in oil. So those going together. Just something to think about if you're trading oil. Might be watching dollar CAD at the same time. Every once in a while, you'll get that fraction of a second or minute, maybe leading time frame there. And so if we go back over to standard here, we can see these big up down moves there on dollar CAD. So they're helping you out. Break it on down to smaller time frame, and you can see you're getting any edge one way or the other. going in onto it. So if we go over here to 1600, just trying to line them up as much as I can. And so you can start to watch and see if, in this case, oil was dropping down, or sorry, dollar CAD was dropping down. So we'd expect oil to start moving on up. And if you can even get just a little bit of that, that works. Now dollar CAD's moving up, so we expect oil moving down. And if you just learn to watch these correlations, they can be helpful in your trading. Dollar CAD's pushing higher right now. Theoretically, oil will be pushing lower. So, obviously not something to totally trade on, something to get some demo experience with, learn it, watch it, see if you can read it. But you can definitely tell the inversion of the correlation. Every once in a while, though, correlations do flip. So it's not one of those things you just rely upon all the time, but it is something that you can definitely use right now to go in and start looking at. Like I said, that dollar CAD's moving up, so theoretically we should be seeing the oil contracts move on down. Going on in, what other reports we got? Natural gas came on out today. So if I switch on over to natural gas, and we got the inventory report right there at 9:30 Central, 10:30 Eastern. Big move, spike down, volume spike, reverse, popped right back up, and but then did about a 50% retracement off of that, and ended up right there in the middle. So spiked down, boom, up, and then came back down 50%, and then moved on back up and broke out of that high, and that was on oil, or not oil, but natural gas inventories, which came in today at, let's see, 115 billion British thermal units on an expectation of 119. And let's see how that compared with the seasonality on natural gas. So came in, like I said, they're at 115 billion, decline. So the storage went down. Stocks were 468, higher than last year at this time, and 29 below the 5-year average. So they're giving you seasonality. See, we've been talking about that. They're giving it to you right there. Seasonality right inside the chart. You got a little chart showing for you, 5-year maximum minimum. So this is basically showing, hey, where is it at? That's that blue line. Okay, that's where natural gas inventories are. And then it's going, okay, so we got that. Where were they last year? That's that gray line. Okay. And then you got, well, what's the average? That's the whole thing right there. So there's some things you can check out, things you can learn on. We'll talk about natural gas a little bit more when we get back. Go check out pound yen. Stay right there. All righty, folks, come on back here to the Diagnostic Trading Hour. Let's go over seasonality on the natural gas storage report here. And we were going into basically where it's at right now and where it moved and how that tied into everything and et cetera, et cetera. Bottom line is came in less than expected, and it did a big spike, knocked everybody out, popped up, and pulled on back now to that same level. Really showing a lot of consolidation right there around 2.6. Looking on over at the pound yen. The pound yen here making some new highs. Pushing on up to 180.21 here over the last couple weeks. Not just highs overall, but we still got a little bit to go for that. And let's see, how far can we go back and get that? Let's see. Yeah, I mean, recently was the most recent high back in November at 189.713. It's been in a range, as you can see, over the last several weeks here. If we zoom in, we can see these last 4 weeks, it's really been bouncing in between basically 180 and 175, and basically cover that entire range again today. If it does break on out, then of course we could look for a move on higher. And right now the high level, but the next stop, I would say, if it is going to bust up, is going to be right up here where the stops are going to be at, right around 184.50. And then it'll try, if it does continue to go, it'll make another break right up here, right around 188. And then it can try to make a new high. But anyways, next stop on the train, if it keeps going up, it's going to be 184.50 right there. All right, so it gives you a little target there on pound yen. Let's see, looking on over another headline for you. I just got this article up over on Benzinga and Yahoo here. CME is closing down nearly all of its pits. I mean, they've pretty much been closed down anyway, but they're shutting them down here in July. And they went in and said that the volume has, slowed down significantly in the pit. 75% in the last 5 years have moved over to electronic markets. I'm sure it's a lot more than that. at this point. It says the Globex started the futures volume on the exchange averaged 2 million contracts a day. Now the number on Globex exceeds 15 million contracts a day. The open outcry futures trading is now just 1% of the company's total futures volume. So literally, 1%, probably less than 1%, is actually how much volume is traded in the pits now. Now it's all on the screens. So following on down there, this, like I said, this is an article I wrote. That's why I'm reading it off. But just to get all the details for you, they're going to leave a few of them open. They're going to leave open the S&P 500 pits. But following the expiration there, so floor-based S&P 500 will stay open. And also, they're going to leave open the open outcry for the S&P 500 options contracts. Following the expiration of the June 2015 contract on June 19th, equity index future pits for the Dow and the Nasdaq will close down, and all other future pits, besides those two that we mentioned, will close down on July 2nd. So literally, it's coming down just to the S&P. They'll locate all of them on a single floor in the company's financial room in Chicago by September. So if you haven't had a tour, go look at it now. Fly out there and check it out. So I was out there a few months ago, and CME and even CBOT were absolutely pitiful. CBOT, I went in there, and they had basically VIX. They had a VIX pit. They had the SPX pit, which was decent size. VIX pit was medium. They had just about 20 guys sitting around doing the ETFs, like GLD and SPY, making options on those. And then they had a couple market makers down there and a couple guys that just they don't want to trade at home, so they rent a spot so they can have their computer up there in the aisle. Just, trying to hold on to the old days as long as they can. And that's pretty much all that was there. So there may have been one or two other random things, but that was pretty much it on the CBOT when I was out there last, just a few months ago. So it really is all going to computers. You know that obviously by now. Nadex built just like, on computers, a completely electronic exchange, and really built for the retail trader. So if you haven't checked it out, hop on over to tfnn.com. Click on that Nadex banner, North American Derivative Exchange, located right there in Chicago. Click on that. Get yourself a demo account. Let me go ahead and show you where to go. Right over here, tfnn.com. Click on Nadex. And trading demo trading platform. Click that. Fill in the form. Takes about 15 seconds. You'll get an email. You can log in. Check it out. If you want to expand that demo out, make it where it's good for a year or longer, then go in, open an account. You only have to fund with right now. The minimum is $100. Obviously, you can put in as much as you want. But if you put in at least $100 or more and place at least one live trade or more, you can call Nadex. Numbers at the bottom of their screen, or you can email them customerservice@nadex.com after you've opened and funded that live account and placed one live trade, and ask them to extend your demo. They'll extend it out for a year, which is great. So you can not only keep trying new ideas, work on ones you got till they're working before you go live, try out new ideas, and not lose that demo account and then have it restarting and you're losing all that information. And they'll put 25 grand of funny money in there for you to start with, and it takes literally about 5 minutes to go from start to funded. So it's a very painless process most of the time there. All right. So what else do we got going on? So open outcry pits, like we talked about that. Why they're closing, because less than 1% of the volume is happening down in the pit. Will that really affect you? Not really, no. Because it's not really a massive part of the liquidity. They're actually not even trading. Now, they can trade them electronically with their tablets, or at least they can on the options. I don't know about the futures, but or they can at least signal to somebody or something. But anyways, they trade the SP, the full-size contract. So it will be, it's like everything's just going over to it. So they're not even trading the ES, they're trading the SP. It's worth more, like $250 a tick or whatever. And so you shouldn't really be concerned about that as far as your personal trading. It is a sad thing to see it pass away. But there's a movie about traders moving from the screens to the pits, or from the pits to the screens. And I know quite a few floor traders. So I work with some floor traders or previous floor traders, And there's a movie called Floored that has some vulgar language in it. So just warning right there for you. But beyond that, it's just really interesting to watch that transition that began then, and now we're really starting to see that come to a close. So, but yeah, last time I was out in Chicago, I was visiting Nadex. I was working with the market maker, talking to them, looking at our potential market maker about trying to say, hey, why don't you make markets for Nadex? And hoping they would hop on board there. Talk to some guys that do some pretty advanced algo fund stuff, and I was like, hey, can you get me out on the floors? And they got me into all the different floors and everything. We were checking them all out. But definitely times are changing. So, my daughter thinks the computer's broken if you have to use a mouse. She's like, why can't I just touch the screen? So she's like, I do want to trade with my hands. I want to be able to touch the screen. But anyway, so next week, what else is coming? The money show is coming on up. Not next week, but next month. So we got the New York money show. I'm going to be out there. I believe Tommy's going to be out there. Nadex is going to have a booth out there. I'm just going to be hanging out and having a good time and visiting. But it's free to go to, costs nothing. It's a fun experience, So it costs you a plane, flight, and hotel, depending upon where you live. But NewYorkTradersExpo.com. Tell them Daryl sent you, whatever. They won't even know. But anyways, check it out. It's it's a fun event. There's traders from all over the world. There's live trading competitions. There's everybody telling you why they think they got the greatest thing. But I always go to I usually find one or two courses, and I'm like, I think I might be able to get a gold nugget in that one. And if I could just get one new thing each time I go to a show, I'm a better trader. And I just have fun hanging out with a bunch of other traders and just talking shop. So anyways, if you're going to be out there, make sure to, email me, let me know. And, we'll meet up and grab a beverage or, whatever. Talk shop, pull out a laptop, have some fun. Okay? So that's going to be happening again at the end of the month. I want to say it's like the 28th to the 2nd, or let's see, what is the schedule here? 28th. So yeah, I'm going to fly in later that day, and I'll be flying out on the 2nd. So there'll be all sorts of cool stuff going on. So make sure you're checking that out. And let's see, what else do we have going? These 5-minute binaries. Some of y'all are doing them. Some of you aren't. Check them out. They trade 23 hours a day. They're on 4 markets. They're expanding them right now. Let me log into demo, because I think what they're about to do is showing in demo, and I just want to verify it. I don't log into demo all the time. But let me log into my demo so I can show you what is coming on the 5-minute binaries. All right, here we go. Bring this up over here. Got to let the new minute pass in. But 5-minute binaries, Forex, Aussie. So, yeah, so what they're going to be doing, they already have it on the euro. They got 5 strikes now. Let's see, they got 5 on pound now. They got 5 on US yen now. They got 5 on Aussie now. And they've now expanded that. I want to say they expanded that to live as well. Let me double check on my end if they've expanded it to live. So down instead of 3 strikes, there's 5. Why is that important to you? Because the market moves, 3 or 4 ticks, and you don't really have a strike. So now you have one. Let's see. We got 5 on Aussie. We got 5 on euro. We got 5 on pound. And we got 5 on dollar yen on live and demo. So that's good news. And we hopefully should be seeing some more size popping up soon as well. So if you're liking these contracts, if you want the size to be bigger, the bid offer size to be bigger, then you need to join the party. Hop on into your account. Even better if it's from a live account. Go to my account, go to contact us, message us, say, will you please add more size to your 5-minute binary contracts? All right? And let them know. And the more people they hear that from, the faster they're going to do it. But I'm hoping to see a increase in that soon. Let's see here. That's the 5-minute binaries. Showed you how to open a demo account. If you don't know who Nadex is, they're in Chicago. They're regulated by the CME. which is Chicago, not the CME, my goodness, the competitors of the CME. They're regulated by the CFTC, which is the regulatory body that regulates the CME and Nadex and some other entities. And so they have oversight right here in the U.S. Your money stays in the U.S. Your money's in a segregated account. What does that mean? It's segregated from company assets. So should creditors ever come after the company, your money is separated, is not considered a company asset. Also, all risk is put up on both sides, so every trade is fully collateralized. You don't have to fear about a broker going bust because both sides had to put their risk up to do the trade, the buyer and the seller, at the same time. They are an exchange. They are not trading against you. They're there to fulfill orders between buyers and sellers. Every contract has defined limited risk. They have contracts that last a week, and they have contracts that literally last 5 minutes. Let's see here. What else? Let's see if any other updates are popping up yet. Let's see. Hoping they're going to tighten that Aussie one up soon. But those are the main updates on that. And like I said, more liquidity. Hopefully, we're hopefully going to be seeing that soon. And just let them know. Let them know you want the liquidity. That's one thing I've definitely seen with Nadex is if enough people send in a message, they hear it. I know a lot of people send in messages they wanted more strikes. They added it. We got 5 now. We used to have 3, and that's just in a matter of weeks. So tell them you want more size and let them know, and they'll push the market maker and say, hey, you need to put more size up there. Let's see here. What else we got? News you can use. Going back on over to Forex Factory here and checking out the news that's coming up, making sure you got the news you need until next week. So let me pull that over here and let me get my news point up on the side, and we'll just walk through that for you and wrap that up. Let's see here. Pulling it up. And we are on February 5th already. That's amazing. This morning, guys, y'all know we had the pound bank rate. Didn't even talk about that one today, but had the pound bank rate. Let's go ahead and just look at it. That's part of why we see these big moves going on in the FX pairs. And let's break that down. There we go. So got a pretty decent little move off of it. Popped on up 526, now 536. About a 100 pip move since that bank rate vote came out. But I'll catch you up on the rest of the news coming up when we get back right after this break. All right, folks. We'll come on back here to the Diagnostic Trading Hour. And so we're going through, we're talking about just the pound dollar making some new highs, popping on up there on the interest rate news. Every interest rate news announcement lately has been pretty big overall. I mean, it wasn't really a massive move right when it came out, but a decent size. We got 526 to 530, about 40, 45 pips. And then, but it continued on up and decided to stretch on out. We have another 40, 45 pips. So just some good moves right there. Trades that we got coming up that we need to be aware of. Let's see here. Lost my screen there. All right. Let's see. So we had the bank rate. And I did remember I mentioned to have caution on that because we're getting a little more volatility. But it still worked out okay. We had earnings releases. VOD I had on my list. I don't know why I don't have it confirmed on my list. Let me see here. VOD, did it come out today? Yep, it came out. So, was correct, but just didn't have it updated. And let me see here. Make sure I put a note to get all those up to date. All right. And then what else do we got? Let's see here. We're going to have CAD trade balance. We had that come out. We'll just go past the stuff I went over Tuesday. Important for tonight. Remember, Australia changed their interest rate earlier this week, okay, on Monday. So they're going to have a monetary policy statement come out at 7:30. That could easily have an impact. So be very aware of that for those who are trading the Aussie dollar tonight. Frank retail sales will be coming out tonight. Usually a pretty flat time. We've had a lot more volatility lately in FX. So I'm a little more cautious on my iron condors, lowering my size. Usually about 25 pips, 11 p.m. to 7 a.m. on the franc retail sales of the dollar franc. Doing an iron condor on Nadex. Another iron condor on Nadex for tonight. 11 to 7 is on the pound dollar. Trade balance, usually not a massive mover. Coming out at 4:30 a.m. Again, that's buying the lower spread, selling the upper spread over on the Nadex Exchange. So foreign currency reserves coming out on the franc in the morning. Franc has been very volatile, so anything could cause it to move. That comes out again at 3 a.m. So if you're trading then. U.S. Unemployment rate, NFP, the big mover, coming on out this Friday. You want to be aware of that one. And let me bring that back up one more time for you. We're going to have to wrap up with this right here. Usual range on the Aussie, 60 pips. Usual range on euro is 100. Usual range on pound dollar is 100. Usual range on dollar CAD is 75. It can actually be a little bit higher because we have additional CAD reports coming out at the same time. Usual range on dollar franc is 92. Usual range on dollar yen is 80. You can straddle these. You can do iron condors on these. Okay? And then if you want even more advanced one, you can buy euro CAD or buy euro dollar, buy dollar CAD, and then sell euro dollar, sell dollar CAD, the lower strikes, into a advanced straddle on those because they usually move more than anything else. But those are the ranges. Again, that's Aussie dollar 60 pips, euro dollar 100, pound dollar 100, dollar CAD 75, dollar franc 92, and dollar yen 80. Check out straddles or iron condor, just whatever's best based on the premium that is available. All right. Y'all have a great show here. Let's do one final wrap of where the market is at. We still got the S&P is 23 points down, now above 200 points, finishing on higher. And that is our wrap for the day. Thank you for joining me for the Diagnostic Trading Hour, and I'll see you tomorrow morning on the Bull Bear Binary Hour. Y'all have a great day.